having a good day. We're going to be talking about Kingsoft Cloud, currently trading hands at $5.76. The stock is down 57 cents for the day. Now, the stock is currently going down. I am actually now shorting this stock, but we're going to be talking about the price targets and where I was recommending a buy. As you can see here on March 18th, the stock moved up to a high of $7.62, which is where I started shorting the stock. And here on March 14th, this is where I was recommending a buy at $2.58. I was actually going in really heavy on call options and shares. And obviously this worked out very well for anybody who got in. I've had some personal family things going on, so I haven't been able to keep up with videos lately. But that is why I do give out my Facebook name in videos. So if anyone wants to follow me on Facebook, if I don't have time to do videos, I do put the information there. So obviously anyone who took this advice has done very well and is very far in the green on not just shares, but the call options due to volatility. It's been pretty insane. So let's keep it moving. Now, Market Beat has a low price target of $18, an average price target of $38.20, and a high price target of $65. Tip Ranks has a low price target of $3.50, a medium price target of $10.75, and a high price target of $18. Now, I do want to point out that according to Zacks, the stock does have a number 4 sell rating. And of course, that rating was the same even when the stock was down to $2.50. So you do have to use common sense. You know, when you have a stock down to 250 cents, $2.50 with these type of price targets, you just have to know when to watch it, know when to buy in. And, you know, you really have to watch the volume, and you just have to know when to sell, when to short it, when to buy back in, etc. But, you know, this play worked out really well for anyone who followed my guidance on this one. And the stock has a low of 40 cents. My apologies, I pulled up the wrong thing here. Just a second. The stock has a low 52-week low of $2.50 and a 52-week high of $50.20. Sorry about that. I actually pulled up Imperial Petroleum, which I did a video on last. So please disregard the last screen I pulled up. And I prepared these before the stock started falling more, so please bear with me. But the stock, right before it just got done falling some more, was up about 123% for the week, down around 16% for the month, down around 60% the past 3 months, down around 88% the past year, and down almost 72% the past 5 years. Of course, the reason I show you this is just to give you some perspective on where the stock is now. And the all-time high on the stock is $74.67. JP Morgan analyst had lowered his view of the cloud computing outfit from neutral to underweight, and he had cut his price target from $8 a share to $3.50. And still that price target was above the current price at the time, near $2.75. So anyhow, again, you know, you have to use common sense. If it's trading for $2.50 and you look up Zacks and it says sell, but you have a price that low and you're looking at these price targets, how much lower is it going to go? That's why I was advising a buy-in at that $2.58. Again, it paid off very well. You know, and of course, you know, Motley Fool was doing their best to beat the company down as low as they can for shorts. You know, a lot of these, you know, companies like Motley Fool, you know, the fact is they get paid off to put FUD out about companies to beat them down into the dirt. But that's good for people like us if you know where to buy and low and where to sell. Get your call options and shares, sell here, get your put options here. You know, we can take advantage of this if we know what these scumbags are up to. So let's keep it moving. And they just go on here to, you know, just try to throw out more FUD, talking about the long steep pullback and, you know, again, just trying to create fear and FUD. You know, they're not out there to say, wow, you know, this stock is really down low. You know, you may want to take a consideration and buy into this and maybe get some options and make some money here. You know, all these news articles out here, they're not for you. they're trying to screw you over. That's why I do what I do. So that's why I highlight these articles a lot of times to show you, these guys are paid off by shorts, people with special interest, and they're just out here to screw you over. They're out here trying to throw FUD, and what did it do? It took off, and it tripled within 4 days. But they do go on to say that, even though a Kingsoft Cloud is unprofitable, which is not expected to be profitable for 3 years, I'm just throwing that out there, the revenue has been growing and its losses have been shrinking. So analysts are calling for more progress this year and the next. But the analyst community consensus price target is near $113. So, that's why I'm throwing this one out here. This is one you may want to consider a position for a long-term investment here. So let's take a look at the ownership breakdown. Private companies own 0.4%. Individual insiders own 1.8%. The general public owns 10.4%. And institutions own 35.7%, with public companies owning the most at 51.7%. Now, they're talking about an issue of dilution of shares. Shareholders have been diluted in the past year, with the total of shares outstanding growing by 8.5%. Now, obviously, earnings versus saving rate forecast to remain unprofitable for the next few years is an issue. For the revenue versus market, the 20.5% for year forecast to grow faster than the U.S. market, 8.5% per year is a positive. The high growth revenue at 20.5% per year forecast to grow faster than 20% per year is also another positive. Now, the analyst future growth forecast, you can see the company. The forecast annual earnings growth at 37.3% compared to the industry of 13.1 and the market 11.7, very positive. The forecast annual revenue growth, the company 20.5, industry 13.1, and market 8.5, very positive. Let's take a look at the earnings and revenue growth forecasts here. So as you can see, the earnings, as I said, it's not going, they're not going to be profitable. They expect it to be profitable for 3 years. So that just gives you an overview of the revenue and the earnings. So again, it just mentions that the revenue forecast is expected to grow at 20.52% per year, which again, that's why I said I feel like if you're looking at a long-term investment, as long as you get in a good price, I think this is a good one here. Highly volatile over the past 3 months. But again, if it's been volatile, as long as we get in a good price, past performance is not an indicator of future performance, right? So that's why we're looking over all this. Currently unprofitable, not profitable for the next 3 years. Shareholders have been diluted, etc. Now, let's take a look at the price to book ratio. It's a good value based on its PB ratio, 0.9. Compared to the US IT industry average of 4.2. So I just want to give you an overview of that, and then the market comparison. So the PB ratio there for you. And again, just kind of going over the future growth, 37.3%, the next 1 to 3 years from 12 analysts. Let's take a look at the earnings per share growth forecast. So it gives you a look at the EPS and the analyst EPS range from 2020 on to 2023. So that's looking really positive. So again, that's why I said as long as we get in a good price, it's looking like a good long-term investment here. Let's take a look at the future return on equity. It says KC is forecast to be unprofitable in 3 years. But again, they said there's not expected to be profit for 3 years. This is why this can get kind of confusing. They're saying high growth expected annually and profitable in 3 years, and they say, you've seen everything I went over. It's looking really good. Numbers are expected to get good every year, but in an effort to be objective and just show you what is out there, I'm gonna show you everything that's out there. But again, I'm really bullish, so that's I just wanted to show you this as well. But like I said, I'm very bullish, and we're going to be looking at if you're not in where you may want to consider a position. Let's look at return on assets. KC has a negative return on equity, negative 10.7%, as it is currently unprofitable. So I just want to show that to you. Financial health. How is Kingsoft Cloud Holdings' financial position? So you can see here in the short term versus liabilities versus long-term assets and liabilities. So just giving you some overviews here. Short-term liabilities, KC short-term assets exceed its short-term liabilities. Long-term liabilities, KC short-term assets exceed its long-term liabilities. So if you look here, you can see the debt and the equity on the chart here. And I just want, again, to give you an overview. Like I said, it's your money. You have to decide what to do with it. But I'm going to give you an entry point, all of the information, and you're going to have to make a decision. KC has more cash than its total debt. Insufficient data to determine if KC's debt to equity ratio has reduced over the past 5 years. So let's keep it moving. Cash runaway analysis, stable cash runaway, sufficient cash runaway for more than 3 years based on its current free cash flow. Forecast cash runaway, KC has sufficient cash runaway for more than 3 years if free cash flow continues to reduce historical rates of 26.5% per year. I just wanted to do an overview of the number of employees. KC has 2.2 thousand employees, and it is steadily growing since 2019. Now, here's some information according to Stock Invest. So if you want to take a look over this, I don't really have time to read through all this. The idea is to give you some, information on where you might want to buy in. So if you want to take some notes here, it gives you an idea on where you may want to buy in. And I'm pointing to be objective, but I'm going to give you where I feel like you should buy in. And here they're showing you the support, risk, and stop loss areas. And they go on to say they don't consider this to be a buy candidate, etc. I told you how I feel on the stock. But then they go on to say the 634 price is undervalued. Like I said, you hear a lot of bull crap out there. That's why I do what I do. And I'm going to give you a place where I feel is the best place to buy. Now here, according to Stock Invest, you see the resistance levels and you see the support levels. So take note of that. And here's the accumulated volume, support, and resistance levels. So take note of this as well. Now, I hold no weight with CNN at all. Their price targets are the most stupid out there. But in a point to be objective, I am showing you out there they have a low estimate of 350, a median target of 1547, and a high estimate of 3389. Now, for those who are not yet invested, we could talk about options, but let's talk about shares. Now, you may want to consider 50% at $4.50 and 50% at $4, or you just want to wait until $4. My best advice would be to wait until $4, because once we see a drop to $4.50, you're probably going to see panic from people who don't expect this stuff, and they think it's just going to blast off to the moon from, when they start buying in at $5, $6, maybe they bought in at $7, and they think it's just going to keep going up, and there's never going to be sell-offs or consolidation. So my advice would be $4 would be a good place to buy in. Thanks. Since I ran out of time there, I just wanted to say I am still shorting the stocks. Like I said, when it got to about $7 is when I started shorting the stock. When it gets down to about $4, I will close out my short position. But you know, if anyone's interested in options, I haven't been getting too much interest in the options. So if anyone is interested in options, let me know and we can discuss that. But as far as I said, $4 looks like a good place. Not financial advice, right? Invest at your own risk, but I think we will see a drop to $4, and then I think we should start seeing support from that level. So I guess that's all I have for now. Thanks for watching, and I will see y'all on the next one. Peace.